Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing in the lower part of Friday's range, and so far we've even seen a breakdown attempt below Friday's low. Now, heading into the open, our intermediate term bias will continue to be bearish, and our short-term bias will be neutral simply because the market was oversold and exhausted into a balance area low. And now early in the session, how the market behaves at the 41.1575 to 22.75 micro bull bear and the initial support zone is going to help set the bias on the day. If off the open, the market is holding below the micro bull bear, that would be a sign of continued weakness and could result in a move down into the overnight low of 41.11 quarter, as well as the initial support zone at 40.93 quarter to 41.02 quarter. That is a larger time frame area of support, and as long as we're not selling off on excess weakness and big and sustained downside momentum, there is a chance for responsive buyers to be active there. But in order for the buyers to regain control, at least on the day time frame, we would need to see the market bounce and then hold back above the micro bull bear zone. So in the event that the market continues selling off and we get a move down into initial support, and let's say buyers do step in there, in order for the intraday bias to be affected and for control to shift back to the buy side, we would need to see a strong bounce and a move back above the micro bull bear. And in the event that we only get a small reaction, that would not be sufficient. And if we're seeing continued and sustained downside momentum, then initial support could get taken out, and a break and hold below initial support would serve as a bearish confirmation on a larger time frame, and that can then result in the sell-off continuing into the support areas below. And on the downside, the more overextended and exhausted the market gets, the better the chance that buyers will be active at one of the lower zones. Now, in the event that the market stabilizes and holds above the micro bull bear, on the upside, we have the previous VPOC at 41.3075 and then the initial resistance zone at 41.4875 to 58.75, and we would need to see a break and hold above that zone in order for the intraday bias to become bullish. So in the event that we get a successful breakout above initial resistance on broad market strength and sustained upside momentum, that would be an intraday bullish indication, and that could result in upside range expansion. Given that our intermediate term bias is bearish, anytime the market gets exhausted to the upside, especially into a better area of resistance, there is a good chance for sellers to step in. And the only time that we would want to be very careful on the short side is if the market is heading higher on unusually high upside momentum. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market deals with the micro bull bear as well as the initial support and initial resistance zone. That's going to help set the bias and tone on the day, and we'll take it from there.